Hey there, it's Casey Dimon here from TaxSaleAcademy.com. Thank you so much for joining me on today's tax sale investing video. I wanted to share something with you today that will help you to avoid putting yourself in a bad situation. Especially you new tax sale investors should really pay attention to this. Now, before I continue, I want to remind you about the tax sale process, right? Every single tax sale property available at an auction was a property where the owner failed to pay the taxes on. Now, it could be because they couldn't pay them, they couldn't afford them, or perhaps they didn't want to pay the taxes. That's a very common scenario. So when you compare a tax sale list to any other list, including just bank foreclosures or the open market itself, that tax sale list is going to have a significantly higher percentage of worthless properties or problem properties. So keep that in mind always. Now, I've unfortunately been on the receiving end of a number of different phone calls and emails from brand new tax sale investors who found my trainings after they have purchased something that they shouldn't, asking me for a way to get them out of that bad situation. Oftentimes, there isn't an easy solution, but I do try to help them nonetheless. But what I see happening a lot is these investors will end up buying somebody else's unsolvable problem simply because they did not do proper research and due diligence. In other words, there's a very specific reason that the owner did not pay the taxes on that property. Obviously, if you do thorough enough research, you'll discover what that problem is well ahead of time before you buy it. But when we look at a lot of these worthless properties, it will become obvious that there was a big problem that's also going to come along with the purchase of that property. It's just up to you not to buy it. Of course, the truth is there's likely some sort of problem related to most tax sale properties. It's just a matter of figuring out if that problem is going to be solvable or if it's not. Buying somebody else's problem is not always a bad thing per se. I one time bought an entire subdivision at a tax sale from a developer that lost it because they had some financial issues and just couldn't pay the taxes on it, didn't want anything to do with it anymore. So what happened was I stepped in, I bought that, I resold it to another local developer and investor, and it's now a very thriving community. I bought his problem, and that's okay. The issue comes into play when you buy the property that nobody wants and that has an unsolvable problem. I had a coaching call one time where the investor thought she was buying a condominium, a nice little development, right? Well, unfortunately, that development had stalled. And instead of buying a condo there, she had actually purchased a condominium that was on the second story, but that building was never built. The developer had subdivided that property, they platted it into the building, and they split it into the little squares for those different condominiums, right? But they never went through with the actual building. The parcels went through tax foreclosure, and now she owns a little box of air above a building that was never built. That is somebody else's problem, and it's not one that can really easily be solved, okay? I've seen other properties go through tax foreclosure because they were on EPA watch list because they had contaminated soil. Now, the former owner in that situation, yes, they would still have liability in the EPA's eyes, but by letting that property go through tax foreclosure, now they have somebody else to go after, right? The former owner is attempting to put some distance between them and that property. And guess who is next in line for that problem? That's right, the person that bought that property at the tax sale auction now also gets a free problem that comes along with it that they have to solve or pay for it. So as you research properties, ask yourself what you think the problem could have been with that property. There's a good chance it wasn't anything related to the property, or it's something very easily solvable, right? Maybe the person just doesn't want it anymore. Maybe it's like that subdivision that I bought. Maybe it's just a bad condition home and you think you can flip it or sell it to another investor that can remodel. Whatever it is, just keep that in mind. Always keep in mind you're buying potentially a whole bunch of problems. Whether you can solve them or not should help you make that decision on what you should invest in. Is it worth the time, the money, and the effort to deal with them? Tax sale investing is an incredible business. You just have to be careful not to be naive about the process and what you're buying. And please make sure you educate yourself before you start investing. If we can help in the education side of things, feel free to click on one of the links in today's description of this video. You can also head on over to TaxSaleAcademy.com. You can get my free book there. You can join the Academy. There's lots of different resources on that website as well. I truly hope that this was helpful for you. And if it was, do me a favor, click that thumbs up button just to let me know. And also, don't forget to subscribe to our channel so you don't miss out on future tax sale training videos. Take care and make it a successful day. See ya.